Hello there, this is binaryoptions.com, and this project is part of the Binary Options Academy projects in the sense that it is an educational project. We like to discuss here Elliott Waves together with Fibonacci because they are going, both of them, hand in hand. You cannot trade with the Elliott Waves theory without taking into account the Fibonacci ratios, the Fibonacci retracement levels, and Fibonacci numbers, of course. This project here is based on flat, or the flat pattern, and the flat pattern, according to the Elliott Waves strategy, it is a three-way structure that looks something like this. You have wave A to the downside, you have the B wave to the upside, and you have the C wave to the downside as well. Now, from this moment on, Fibonacci comes into discussion in the sense that we'll have different retracement level for different types of flats based on the Fibonacci retracement. Like any corrective pattern, according to Elliott Waves, it should be formed out of a three-way structure, and it is being labeled with letters. Attention here, letters. So this would be wave A, this should be the B wave, and this should be the C wave to the downside. So A, B, C. Whenever you see such a move, this is a flat. Why? Because of the retracement level. Now it depends very much what kind of a retracement level we have. The minimum retracement level in a flat, it is 61.8, like we've discussed in another project that we have here on Binary Options Academy. So B wave should retrace more than 61.8% when compared with the length of the previous wave A. If the B wave is not retracing more than 61.8, then that is not being called a flat. However, what one should do is to go and take the Fibonacci retracement and go all the way and measure the length of wave A. And then to look at the 61.8 is the first thing to do. Well, going and taking the 61.8 from here to here, then we should go and see if the B wave retraces more than 61.8. From that moment on, we can say this is a pattern called flat. Now, from this moment on, the flat divides into different categories based on the retracement level. We have a flat or another type of flat or different types of flats if it is retracing the B wave between 61.8 and 80%. This is being called a flat with a weak B wave. Moving over, if the B wave is retracing between 80% and 100, it is being called a flat with a normal B wave. And if the B wave is retracing between 100 and 123.6, it is being called a flat with a strong B wave. Of course that based on this there are different types of flats on each and every category, but what you should know is that the minimum level to be retraced is the 61.8, and from that moment on we should look at finding the category of a flat based on the Fibonacci numbers. So the first important number or ratio is the 61.8, or the golden ratio. The second one to watch is 80%, and you may just go and edit your Fibonacci tool, edit label in here, not label, let's find the level, edit the levels. We can say that we add a new level. Let's say that we add instead of 161.8, we add here the 80 level, which is 80% retracement. We already have the 100, and we want to add also the 123.6. and we click OK, add like this, click OK, and we have also the 80% and the 123. And just like that, we connected the Fibonacci with the flat pattern in the Elliott Waves structure. You might say this is not important. It is extremely important, and on the next video analysis that comes with this educational series, we'll take an example and look at the possible flat scenario that is happening or might happen on any currency pair, as these patterns are quite common. Stay tuned please for the next part.